Morning all. How are we all doing? Happy Monday. Another week. Going to kick off with the news today to see what we've got coming up for this week. I've just so that you know, the COT report hasn't been updated on the website again. There's still problems with the CFTC. I put a post out in the Telegram group and on socials about it, but there's still no updates since the 24th of January. So any data on the website related to COT, you can still use it, but got to use it with a bit of a pinch of salt at the moment because it is obviously old data. However, COT doesn't change that dramatically. We usually only see, I mean, probably the most I've probably seen change is about 5% in a week. It's rare that we go much more than that unless there's a real fundamental shift. So, but just bear in mind, anything you see on the website to do with COT data is actually a little bit out of date. They are going to have the next report out on Friday, and they are going to drip feed the missing weeks to us, basically. So hopefully by this time next week, on Monday next week, we should have the COT report up to date. So I'll be dragging all that data in and updating it. But I need to see what's going on with this because all the news we've got is 24th of January. Since the 24th of January, we've had CPI figures, we've had unemployment figures, we've had interest rate changes. There's loads of stuff changed. So be careful with COT at the minute. I'd rely more on anti-sentiment data than COT for the minute. But anyway. So yeah, so just a word of warning there. Morning, David. Morning, Eric. Morning, Diamond. Morning, Seymour. Yes, I had a very good weekend. Hope you all had a good weekend. I went drifting yesterday. Fantastic fun, that is. So yeah, really good. My 13-year-old son, he's really into drifting. Not in real life, but in he's got a nice, set up for Assetto Corsa and other games with a steering wheel and everything. So he's 13. He went drifting yesterday. Took to like a duck to water, basically. He was doing donuts, figure of eights, all sorts of stuff, like straight away. It's amazing how when you play games, you just know what to do. He's 13. He's driven loads of stuff. He's driven Ferraris, he's driven Porsches, he's driven all sorts of stuff on track days and things, but never drifted before. But yeah. So just looking at the news coming up this week, there's no New York session this afternoon, so I won't be streaming this afternoon because it's shut. So if you're using the opening range breakout EA, I would turn it off for this afternoon because you're going to get very low volume and volatility. Well, actually, one of two things is going to happen. You're either going to get low volume and volatility, and we're going to see a nasty range, in which case you want to be selling the highs and buying the lows rather than looking for breakouts. Or the other side of the coin is because there is such low volume and volatility, we get smashes, breakouts with lots of slippage. So either way, you don't really want to be involved this afternoon. So I won't be trading this afternoon, the opens, obviously, because there is none. They're not open. However, the CFDs will still be trading. So it's only the futures market which will be shut. But obviously the CFDs is based on the futures data. So you'll be filled in with broker data, which is whatever it wants to be, really. So yeah, so no session this afternoon. So news, looking at the outlook for this week for news, there's a fair bit this week, quite busy. So we've got the monetary policy meeting minutes for the Australian dollar to kick off tomorrow morning. Unlikely to do anything. We've had all the statements and everything already from the Aussie, so we might get something in there that gives a clue to forward guidance, but not normally. We got PMIs for Euro tomorrow with the French and the German PMIs. So although they are classed as orange, they are important. So I would pay attention to those tomorrow morning, 8:15 and 8:30. So really awkward timing. So tomorrow morning's DAX likely to be a fairly tight open and then a break when we get these figures, because I want to wait for those figures to come out before they start moving things. 9:30, we've got the PMIs for the UK. Then in the afternoon, we've got CPI for the CAD. So inflation figures for the CAD, massively important. There's no forecasts showing on those for some reason. Not quite sure why. We've got the PMIs for the US in the afternoon as well. So very big day tomorrow across the board. Euro, pound, CAD, US, all got news impact. Then going into Wednesday, we've got the wage price index. This is not unemployment related. It's to do with wages, and obviously it's important at the moment because of inflation. But see what happens. I mean, I'm asleep for that, so whatever happens, happens. And then we've got the rates as well for the New Zealand dollar. So we're expecting to go up to 4.75. So if we have a quick look at the New Zealand dollar, just conscious DAX is going to open in a minute. We've got 30 seconds. Let me just quickly get over and open up fundamentals. So New Zealand dollar were the first country, New Zealand were the first country to go with no rate increase on their last announcement. So last time they decided, actually, we're going to freeze rates. Didn't work. Inflation basically froze. Their GDP went up, which is fine, and their unemployment went up as well. So basically, wrong decision. Too early to freeze, basically. So they are going to increase rates this time round. Market's just opened. There we go. So your pre-market 15 is there. If you're taking the pre-market 15-minute breakout. So you're short at the moment. This account is running the 5, 10, 15. So morning, Tony. Anything happen with the DAX? It's not open on IC markets. Yeah, DAX is open. Speak to IC markets. If it's not, they've got a problem, I guess. So nice opening range breakout on the DAX this morning. So the range was 14.5 points. You've had 12-point breakout to the downside so far. So let's have a quick look at the DAX higher time frame, see where we're potentially going. So we had a nice big up day on the DAX and a gap fill. It makes sense to come and take this liquidity this morning at the highs. Three-quarters of an ADR. To the downside, we've got propulsion gap in here, which has been tested multiple times. But obviously this is Monday, so this is a new day, new week. Not necessary. Most positions will be closed over the weekend for most traders who are trading intraday anyway. So whether or not there is liquidity sitting there, don't know. We'll find out. But that's the first sticking point, potentially, is in that propulsion gap. Failing that, we've got sort of a fairly nice potential resistance area there, which could well turn into support as well. So there's a couple of areas to the downside, but see if we get an open to a break to the downside at the open. It's pretty strong at the moment. Doesn't seem to be stopping. So you've got a 1-to-1 there. So the range was 14.5. It's moved 15 points so far. Right. We'll just see what happens with that in a sec. Just go back to the news quickly. So yeah, so 4.75 for the New Zealand dollar. So this is going to be an important one this week, because this is now going to take them in line with US, basically, but their rate increase is much stronger. So this will boost the New Zealand dollar if we get the rates coming out as expected, which I think we probably will. So important one this week. We need to be aware of that one when it when we wake up, or when I wake up, because I'll be asleep when that happens. We've got the press conference as well at 2, which means they will set out the statement. So you need to be watching Financial Juice to read up what exactly they've been talking about with the rate announcement. 9 o'clock, then we've got the EFO climate, which is irrelevant. We've got the G20 meetings. Most of the G20 meetings are going to be revolving around supplying more arms to Ukraine from Europe. So unlikely we'll see much coming out of that, but you never know. And then we've got FOMC on Wednesday at 7 o'clock. So this is not a rate announcement. This is just the FOMC meeting minutes. So this is where they stipulate what they're going to be doing with forward guidance with monetary policy. So we need to keep an eye on that as well. That will be could potentially be a big one for the US. If they come out really hawkish and really bullish, we're going to have some big moves on the US, and I think they probably will. Bank holiday on Thursday for the yen. Then we've got GDP for the US, so another big one for the US, and then we've got PCE for the US on Friday. So pretty big news all week, basically. The main thing, obviously, the main focus is going to be the interest rates for the New Zealand dollar. So we've seen the New Zealand dollar weaken over the last couple of weeks after a very nice strong run. So the market's been unsure as to what to do with the New Zealand dollar. So if they come out with that 4.75 forecast, I think we're going to get some real good strength in the New Zealand dollar. And again, I'd really love to see what that impact is making on the COP, but we haven't had it now for pretty much a month. So nothing much we can do about that. Oops, sorry, I've just clicked on a wrong button. What's that opened? OBS. Go away, OBS. Okay, so there's your 5-minute opening range in. So we've pushed down and rejected so far, but there was a lot of bearish price action in there. So still closed bearish. I think there's a good chance we might run to the downside on this today. We'll see what happens at the open. So that's all the news covered. And everything you've got to look out for this week. So lots and lots there to think about. Nothing today, though. No news today, so normal trading day today. Over the weekend, the only really interesting thing that I saw over the weekend was North Korea firing ballistic missiles, which is great, and China saying that they're going to back Russia and give them some weapons, which is not good. So we've got Russia and China against the world, basically. Barkin's come out and said he supports the 25-point hike. So again, all talking about continuously increasing rates. That was on Friday, at the end of Friday. So that's it. So nothing else over the weekend has made the news. So don't have to worry about that. Have a look at the buyer scorecard and sentiment in a minute. Yeah, so we are breaking to the downside. So short. Hello? You're going to trigger me in or what? Yeah, thank you. Short the DAX. So downside momentum, potentially looking for a move down into propulsion initially. So got roughly 30-point move to the downside. So if you're on the pre-market, obviously you're already in short. If you're on the 5-minute, you've just got short like I have. It's finding a little bit of buy support here at the minute. This is all pre-market though, so actually it's not pre-market, is it? That's Friday. Yeah, sorry, this is Friday's propulsion gap. This is my Robo Forex account, so this is proper Frankfurt exchange data rather than broker data. Right, see how that goes on. So it looks bearish at the minute, but we are finding a little bit of buying support down there. So see how we go on. Morning, Stevie. Tony, I had to change it back to DE30. Now it's working. For the last year, it's been DE40. Oh, they've changed their symbol, have they? Ah, why then? Morning, Big Papa. Right. So having a look at the buyer scorecard, obviously there's nothing much changed because we've had nothing changing from COT. So basically, it's all the same buys and sells as we've had previously. The main impact on these at the moment is going to be with retail sentiment. So as retail sentiment changes, it's obviously going to change the scorecard. So the main buys and sells are pretty much the same as they were last week. I still haven't changed that filter. I'm going to do that on the sentiment one. I'll do that today. I've got to do that. Remind me to do that. Remind myself. I'm talking to myself. Remind myself to do that. I take that back. The chart is working, but cannot buy or sell. I don't know. You need to contact IC Markets. They've got some kind of issue there, Tony. So pound Swiss. Somebody was talking about earlier, David. Let's have a quick look at yours first. Pound Swiss and US dollar yen. So from the combined sentiment perspective, pound Swiss is a long, so that's a buy. You got into a sell on it, did you? Well, pound Swiss has never had COT short, but sentiment is saying to go short. Yeah, sorry. Yeah, sentiment's right. Yeah, sentiment goes short, but there's no COT bias with that one. So nice break to the downside at the moment. Pound Swiss. Yeah, so I mean, it is a short. It's been, don't know when you got into it. It depends when you got into it, but what I would possibly look for is a push back up into there, or potentially taking out these highs. But yeah, I mean, it's still a short. The market is still long on it, so obviously they're holding it down here. They're not going long. So that seems okay to me still. US dollar yen. So US dollar yen, yeah, buy, COT buy there. So US dollar is a good buy. Don't have an issue with buying US dollar yen. It's still going up, so should be fine on that one. But don't, these moves can take 2-3 days, sometimes more, depending on what's going on. So it's not because retail is a particular direction on something. So at the moment, retail is selling the US dollar yen. Yeah, so they are 65% selling US dollar yen. So it's a strong buy for us. Which means basically the liquidity is always at the highs, obviously, for them. So as they've been selling hard on this thing, obviously they've just been jumping in every time the market goes short with their stop orders. It pushes up, it starts to push down, so they get in short, they stick their orders there, come up and take them, we drop short, we put their orders there, we come up and take them. There's a load of liquidity now sitting there, and today there's a load of liquidity sitting there. So, it's just a case of waiting. The problem you've got today is there's not going to be a lot of movement on the US dollar, potentially, because market's closed. It's bank holiday. So you might be, today I suspect, which is what normally happens on a bank holiday, we go sideways. So it's just a case of waiting. But they will only go and grab that liquidity if they need that liquidity. If they can execute all their orders with normal price action, we'll get an area of balance and accumulation. It's only when they need to find liquidity, they know where it is, they'll go and grab it there. So we have to wait, basically. And it could come down. Don't forget, retail, just because retail is a direction doesn't mean the market will not go in that direction. It will go in that direction. But if you've got COT on side, and this is why I sort of preach, get on board with the ones that have got COT on side. So US dollar yen is good because we've got positioning from the large market participants long, and we've got retail sentiment going the other way, which means when these market participants need their liquidity, they will go and get it in the direction that they want to go. So that looks really good. The pound Swiss one, not quite as good because the COT's not on side with you, but it's the pound. So I can't see anything positive about the pound at the minute at all. So, and we've also got news on the pound this week. So tomorrow we've got the PMI figures. If PMI come out negative, you're going to get a lovely big drop on the pound. So that pound Swiss sell will work very nicely for you. You've also got all the euro news, and the Swiss franc will move with the euro. So you've got two news events affecting the pound Swiss tomorrow. Not giving this any chance to move at all, is it? It's interesting. Euro's going nowhere at the moment. You typically would see the euro pump when the DAX drops, but not moving at the minute. Not going down either. So, excuse me. So pound Swiss, be looking to target yesterday's low basically on that 39 pip move. Okay, so there's your 15-minute opening range. $15. So look for a pullback and then a drop. Or just drop, which would be absolutely fine. Right, let's have a look at the ADRs so far today. Morning, Philip. Tony, I'll take that back. Chart is working, but cannot. Oh, yes, you've already said that. So looking at the ADRs, only one today, Aussie dollar, New Zealand dollar. So overnight, we've had a fair bit of movement on that one. Really strong push straight up today for the Aussie. So if we look at all the Aussie pairs, all of them fairly strong today against everything across the board. So nice strength in the Aussie. So yeah, Aussie New Zealand ADR hit. So depending on how you feel on this one, if we look at the bias scorecard on this, Aussie New Zealand is a sell. So we've got COT as far as we know at the moment. And again, this is really tricky. We've got COT at the moment on side as a short with this. Morning, Adrian. We've got fundamentals mixed, although they're more negative for the Aussie New Zealand as well. So everything is pointing for a very nice sell Aussie New Zealand. The only thing we've got against us at the moment is retail sentiment, which is offsetting this a little bit. So if this retail sentiment drops and goes the other way, back to either a neutral or to a negative, we're going to drop to a -6 to -8 on this. So this is a strong sell at the moment. So if we look at the Aussie New Zealand on a higher time frame, at the moment we're in a pullback. Now I was expecting this pullback to start somewhere around here. So there's a good couple of sell opportunities. Every time we got extended here, there were sell opportunities to get into this. And it's still pushing. Now we're extended on the 4-hour RSI. So if you look at the hourly, this is where all the entries were. You had an entry there, entry there, entry there, and entry there. So it was these pops there that we got down, but it's not able to make any movement to the downside. So we've got the main news this week is the New Zealand dollar, which is on Wednesday. So we've got the Aussie wage price index, and then half an hour later, we've got the New Zealand dollar rates. So if we get these rates at 4.75 on this Aussie New Zealand, there's a really good strong chance we're going to get strength on the New Zealand, and then this is also going to drop. So that could be what causes the next leg down to commence. So at the moment, this is why I was looking short. We were roughly around about 50% retracement on the move. So somewhere in this area, I was looking for shorts. And obviously now we've hit ADR to the upside ahead of the news. There's a good chance this is where we want to start getting in. So it's a good short opportunity on this one. So dropping down to M5 for the ADR reversal. M15 is 105.04 at the moment. You got 105.80 on the M5. So tighter obviously entry on M5 than M15. But yeah, looking for a nice short opportunity on that one. Aussie New Zealand. So that's a good ADR hit to the upside for a short. There's nothing hit the monthlies. This is the first time I've seen the monthlies flat actually for quite some time. So we're on the 20th of the month. Obviously it's a short month, February. But we've got nothing hit on the monthly. So we haven't had any real big moves this month, which is kind of indicative of being a frustrating month because it's been very, very flip-floppy all month. So there's nothing strong enough to actually hit its monthly ranges at the moment. If we do hit any monthly ranges this week, bear in mind we're towards the end of the month. So they could be good opportunities, but I would just basically flip over to the buyer scorecard and just check it out and see whether or not you should be long or short it. Obviously, if it's not a strong buy or sell, you can still see whether or not it's a negative or a positive number. So it's a little bit more bullish, but not very bullish. And you can look at these things like Euro Swiss, for example, and say, right, well, it's range bound, but it's slightly bullish because we've got a 2 there, which I've just scribbled all over. Got 2 there. So everything's kind of mixed from a fundamentals perspective. However, COT positioning is long Euro, short Swiss. And we've got retail sentiment at the moment long on it. So we should be going short. So take that out of the equation and put that as a +2, all of a sudden everybody goes short Euro Swiss. Suddenly this is a +4 and it becomes a buy. So whenever you're looking at things, just try and think ahead. This is the main thing that changes the score, is the sentiment. So obviously this is updated once a month, whenever the interest rates, the inflation, the GDP figures, unemployment come out. So there's very little change on the main fundamentals from a day-to-day, week-to-week basis. COT changes usually every week, but not a massive change. But retail does change on a daily basis. We can flip from being, yes, we want to be short on this, to neutral within 2 or 3 hours when there's a news event or a massive stop out. So keep your eyes peeled on these, because these biases, long and short, the best ones will change, but they will change on retail sentiment. Yeah. So it's always good to look at them when you're looking at a pair and say, right, Aussie, New Zealand, what is it? At the moment, it's a -4. What could it be? Well, if that goes from a +2 to a -2, we're going to add 4 onto that, which gives us a -8, which is a strong sell. So I'm just waiting for retail, basically, to all flip long. And as soon as they flip long, that will give us a -2 signal to go short, and then that will come down. Likelihood is that will happen on news event, when if we've got news coming out Wednesday. So we just have to think slightly ahead of ourselves as to what could potentially impact the market this week, when we're looking at each individual pair. So there's nothing on the monthlies, but if you get a monthly light up, that's what you need to do. Just go and have a look at the buyer scorecard. Is it a good sell? Is it a good buy at the moment? If it's not, or in between, then it's your decision to make, isn't it? But so far, nothing hit there. Nothing on the weeklies. Obviously, it's Monday, so Aussie, New Zealand, you're only opportunity for a short at the moment. RSIs quite flat as well. So a lot of these RSIs that we had lit up last week have all played out. So if you got into all these trades, you've banked them already. So it's kind of a reset at the moment, because we had like strong movement, mainly on a lot of these US pairs. We had a lot of strong movement up and down, and they've all kind of played out. All the pound ones have either gone sideways and the RSIs have unlit, or they've pulled back. So it's all kind of back to reset, really. So at the moment, the only things we've got extended, which we've just looked at, is Aussie, New Zealand. That's extended on the 4-hour and extended on the hourly. So the hourly is above 80. So we're up to 82, 83 now on the hourly, massive extension. So anything over 80, I'm very interested in as a short, and especially when it's gone parabolic, because it means that there's been no profit taking on the move, very little. We've got one down candle in the whole move there, which happened in Asia. So there's not really been a profit take move since this started. They slammed through this propulsion gap, broke that high. So they're coming down to retest that high, which is that propulsion gap, which started the move in Asia. So that's your short down into there, potentially down into here, depending on how brave you're feeling. So if you look at this on a shorter time frame, there's your potential resistance there. Resistance, which will turn support, ties in with the propulsion gap that started the move. So that's an easy 35 pips to the downside, which is over half an ADR. But obviously it depends when you get in. So if you're going down to M5, you're going to get roughly 25 out of it, which is about half an ADR. So pretty good ADR reversal opportunity. And obviously it's extended on the hourly, massively extended on the hourly. So, this is what we will be looking for. Some kind of profit take move. So parabolic profit take, parabolic profit take, parabolic profit take, parabolic profit take. But don't get greedy. Yeah. At the moment, it's in an uptrend. We are expecting it to come back into a downtrend at some point. But right now, it is an uptrend. So don't, get greedy. But if you do want to get into this as part of potentially a longer term move with the New Zealand dollar strengthening, this is a really good entry to get into. And if you can hold it, and we break that low, you can add into this and go long term with it. Up to you. I'm personally, you know me, I'm in and out and banking it. So, but yeah, looks good, but still pushing hard at the moment. And the only other thing we got is the Aussie CAD, obviously because the Aussie is pushing at the minute. Canadian dollar's had a little bit of weakness. We're up into the propulsion gap on this one now here. So good opportunity for a short, nicely extended on the hourly. We're over 75. Again, same thing, profit take move, profit take move, profit take move. We're in a downtrend. But the thing you've got to bear in mind with the CAD is it is tied a lot of the time with its movement to the US dollar. So when the US dollar has a rally, the CAD will rally with it because they're close trade partners and their economies do affect each other a lot more than everybody else. So you need to just be aware that we are looking at a strong US dollar at the moment. But it has been very strong and there's a good chance it might pull back a little bit before we have the next leg. But if it does power up, obviously, that's coming down. Canadian dollar strengthens, Aussie dollar CAD comes down. So it looks really good for sure. Nicely extended on the RSI. So again, drop down, M5, wait for the reversal alert. You probably had it actually this morning. No, just about to get it. So M15's there, 5 minute, just about to get the reversal, literally now, next 5 minutes. We pulled back on the DAX into propulsion. Sellers adding. That's good. So I'm too short on that at the moment, on the 5 and the 15. So that's it from an RSI perspective as well. So yeah, just about to get a reversal out on Aussie dollar CAD. Longer term on that. The Aussie dollar CAD. Oops. Is a sell, no cop bias. Market is long. Market is short in it at the moment, so it's a long retail sentiment trade, mixed fundamentals. So there's no real advantage either way on it. But I would say, you know, put 50% of the US dollar into the mix with that, we should expect that definitely to come down. I'm not quite sure what's causing all this Aussie dollar strength this morning though. No news. As soon as anything on China. No, nothing with China trade exports. The Aussie dollar is a big partner with China. They do a lot of export to China, which has just opened up again. So that might be something to do with it. But obviously, as you can see, long term, we're in an uptrend on this. This is because we've had such a weak Canadian dollar and US dollar, which has now changed. So this is where we got the change. FOMC and the fundamentals all kicking in, the unemployment on the US, it's all strengthening the CAD. So, however, obviously we are pulling down into support. We're kind of contracting a little bit more down here, but I would expect that to continue. So it looks like a nice short now. Would it benefit to have a column for average sentiment over a certain time? Possibly, but bloody complicated, and I can't be bothered. If I'm honest. If you want to see sentiment over time, just go and look at the historical sentiment. That will give you all the sentiment over time. Just a note of warning here. I'm seeing anomalies coming in every now and again, and it only lasts for an hour. And it's basically, I'm not quite sure. I've got to investigate what this is. And it's not happening all the time, but it happens on Fridays most of the time. So I've got a feeling it's market close. We get the odd one which drops like this. So the reason I've noticed this is because I'm running the sentiment EA, which is this one here. So the sentiment EA basically is trading against sentiment automatically for me at yesterday's highs and lows. This thing's banking like mad. So this is running on a new account. I've got it running on another VPS on another account, and it's absolutely creaming it. So yeah, this is fast becoming my favorite strategy. just trading against retail, just literally just whatever they do the opposite. You know, the problem with counter sentiment trading has been, in the past, every time I've looked at counter sentiment strategy, I've always used a stop loss. This is the first time I've actually reinvestigated it with a position trading strategy, and it's just killing the market, killing it. And it doesn't have a massive amount of drawdown either, because it's, if you think about it, when you've got sentiment, let's say, for example, sentiment is all long on something, which means we go into a short. Because the sentiment is all long, what you tend to get is that. If you're wrong, you get a little bit of that. Yeah, sort of, it goes more range bound or into a tight channel like that, rather than going against you massively. So what I'm finding is drawdown is very small and reward is very quick. So a lot of these, I'm in and out in the same day. I'm targeting 0.5%, which is $500 in this case. And it either gets there really quick within a day, maybe 2 days, or you get into 2 or 3 positions and it gets there within 3 or 4 days, but with very little drawdown. So yeah. But for historic, and this is why I've noticed this, because on one of the accounts it took a long and a short on CAD Swiss on that one. So yeah, I had a trade going on CAD Swiss which had 2 positions short, and then it suddenly took a long, and I was like, what? Why is it taking a long? That's why it took a long. Because the data dropped out for some reason on that pair. So what I've done on the sentiment EA is I've put a filter in to say, do not trade if sentiment is 0 or 100, because obviously it never ever gets to 0 or 100. Whenever these data anomalies happen, it tends to be the data drops to 0. So I'm going to filter those out completely. So if the EA goes and gets sentiment, it comes back with a 0, I'll ignore that. I'll wait for the next update, which will be in an hour. So I can filter this out, but I'm still not quite sure why it's happening. But it's not, you know, it's a rare thing, which is what makes it so difficult. But you see it happens on all of them at the same time. So something happened with my scripting by the looks of things at that time. And it was on a Friday at 2 o'clock in the morning. Sorry, this morning at 2 o'clock in the morning, which is weird. I can filter those out. But anyway, so yeah, so to answer your question, Seymour, you've got the sentiment, historic sentiment here over time. And I will update these charts to work on 4 hours. The only reason it's working on hourly at the moment is because I'm just gathering data at the moment, because I've only started this on the beginning of January. So I will redo these charts for 4 hours for historical, just so it loads quicker. But it's all there if you want it. You can go back and have a look at all the pairs and how quickly, and this also shows how quickly they change as well, doesn't it? So you can see with the pound CAD here, at the beginning, down here, sentiment was 25% long, which means you want to be longing it. And then as it flipped up to over 75% short, which was here, that's when you want to flip the other way. Sorry, 75% long, you want to be flipping short. Do I use anything like Sharpe Sortino ratios to measure your strategies? No. I use return on drawdown. You can use Sharpe, you can use Sortino. There's loads of different ways of measuring how good strategies are. Do you know what? I don't care about anything like that statistics-wise, really. I'm in it for the money. So I take all my strategies, as you know, they bank money when the money's there. I'm not interested in strike rates, all that sort of stuff. That's for stop loss people. It's important for stop loss strategies, but position trading, you know, look at this. Do I want to take that $250 now? Yeah, fancy, bang, just bank it. That's me. I'm not interested in the details of strategies. I've learned over the years by developing hundreds of strategies that it doesn't matter. Really. It's all about banking money. And the only way you lose money is by using stop losses. Stop using stop losses, stop losing money. You just bank money. So I'm also looking into a hedging strategy as well at the moment, which has got a lot of promise, which is to do with hedging at support resistance. 125 on Aussie New Zealand. So even further extended. So just keep dragging that up until we get in. So I'm looking at a way of hedging, basically. So it's very similar to the position trading strategy. In fact, it's almost identical to the position trading strategy, except it's a case of looking at support and resistance levels and basically just hedging. If you get into an entry and it doesn't work, if the second one doesn't get you out with a profit, on the third entry, hedge down to the next support. Yeah. And as you hit that next support, close that hedge out and enter the third entry. So it's very similar to the hedging EA, the market reversal alerts EA, which is hedging, which is this one. So you see this is banked $8,000 over the last week, and it's sitting in 6% of drawdown. So it's very similar to this. Except what it will do is it will own this new version that I'm looking at is for higher time frames for H1 and H4, but it will only hedge on the third entry. So your first and second entries short. If they don't play out, we will hedge the next time, and we will also still take our short where we're going to take it. So what we're doing is we're just grabbing some money in the interim just to bank a little bit over there. But I'm kind of looking at this in relation to the sentiment EA that I'm developing, which is why I'm doing this experiment with all pairs on M5 hedge. So this is the market reversal alerts M5 hedging strategy, which it's only got up to 9% in drawdown. It's banked 8%, so it's fluctuating somewhere between 4 to 10%. So the hedging part of it is what I'm interested in. So I'm doing analysis with all of this data when it's. I need to get a couple of weeks worth of data in here just to watch it. So I'm just trying to calculate basically the best hedges, whether to be off the first entry, second entry, or third entry. Is what I'm interested in. So, but that will be something I'll do later if it works out. I mean, if I look at the data and there's no edge, then obviously I won't bother. But yeah, that's running nicely. That is. I'm excited for the directional bias EA. Add to the arsenal. Yeah. I mean, it's the other one. It's on my other one of my other VPSs. It's on that one. So this is the sentiment EA running. This is doing drawdown control as well. But you see, it's got the odd buy and sell where it shouldn't have because of this glitch with the data coming through. But this is banked $3,000 over the last couple of weeks. It's in 1,200 drawdown. This varies between profit and whatever. But this is not banking anything. I'm banking this manually. So it seems like US dollar Swiss there. We've got a quick look at US dollar Swiss. See what the sentiment is on it at the moment. So 81% are long, so we want to be shorting it. So we've got 2 shorts on. We've got 3 shorts on at the moment. It's pushing up at the minute. But I think I had one I banked there from there as well. Can't remember, but yeah, it's a case of I haven't got any TP set on this, so this is just testing functionality. So in real world, you would be like, yeah, well, let's take this US dollar Swiss off now. We've made money on it. Job done. I'll leave that one on there because the sentiment is still long. So likelihood is they're going to come and take that liquidity and run short. So if it pushes up to there, I will get into another position and get out. If not, that will go into profit. Happy days. So yeah, but it's doing really, really well. And literally all this is doing is looking at the sentiment and going, right, you're all long, I'll go short. But it only goes short at logical areas there or there. If it was going long, that's where it would go long. If it's going short, that's where it goes short. It's literally using support and resistance only, because that's the best place to get into a trade. But if you do that on all 28 pairs, you're always going to be in something. Adrian, best VPS is on the website on this page. There, I'll put that in there. So my VPS provider is Forex VPS. Here, VPS Forex Trader. That's the VPS I use. Been with them for years, no problem with them. Right, so let's have a look at all of what we've got today to look at. So sentiment-wise, let's start with the sentiment. See if I can do this. 6.5. This is going to... What I'm going to do plus minus twos only. So looking at retail sentiment, the positions you got on per sentiment, were those manual trades? No. So just to explain the way the sentiment EA works, literally all the sentiment EA does is, this is an older version, but it's the same thing. So shut that down so we can see a chart. So what it does is it draws in last week's lows and highs, and it draws in yesterday's low and yesterday's high. Yeah, which happen to be in the same place here, which they probably will be for most pairs. Let's switch over to something else. Yeah, he's turned off on that. Yeah, so you got yesterday's low, yesterday's high, last week's high, and then you'll have last week's low is down there. And you've got the 4-hour high and the 4-hour low. So literally what the sentiment, the whole premise of sentiment is when you're trading against sentiment, yeah, so 64% of the market at the moment is short on this pair. So we want to be going long, yeah. So what the market will do is it will hunt the liquidity, yeah, and it will reach for the liquidity. So the liquidity is typically going to be at the highs and the lows. So we look at the last week's highs and lows, we look at yesterday's highs and lows as the immediate spot that liquidity will be taken. If you want to be super aggressive, you can use the 4-hour highs and lows as well. And as you can see on this one here, they've taken the 4-hour low and they've taken the 4-hour high. Yeah, so that if you want to drop down into slower time frames, this is running on M15. But if you want to drop down to M1, for example, you could use the 4-hourly highs and lows. They'll grab the liquidity there. It's not using any kind of a reversal alert or anything. It's literally just waiting for a pierce above and a close below. So if, for example, this now went like this, traded down here somewhere today, did that, and then pushed up, that candle there is the entry. So we have to have taken the liquidity at the low and then broken back above. I don't care how long it takes. They may do a pierce like this. You might get a candle like that that just goes pop straight through, back out, in. Thank you very much. Or you get a case of, let's say that was yesterday's high, where it goes and mucks about up there for ages and then it drops down. That's where you would get in. Yeah. So it doesn't matter. I'm not interested in price action. What I'm interested in is the theory, which is they take the liquidity and then they start the move. So I don't care how they take it. You could say, I only want to take a bearish engulfing above there, blah, blah, blah. The more rules you put in, the more difficult this is going to be to find entries and to backtest. Take the liquidity, go. That's it. I'm acting like a bank here. That's literally all the EA is doing. It's monitoring these levels. And as soon as liquidity's run in line with sentiment, or against sentiment rather, I'm in. That's it. Simple, 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 simple. Yeah, so that's all it's doing. Nothing more complicated than that. And this is all in forward testing at the moment, obviously. So this one here, this actual one that you're looking at here, this is the one that hasn't got any TP set or stop losses. So literally I've said, just get me in. Just show me that you can trade properly. Where's my dashboard gone? Oh, there is no dash on this one. So yeah. The other one I've got running has got TPs running, and this is also testing the drawdown control, which is what I wanted to test. I wanted to make sure the drawdown control system was working properly. So it's only getting in at sentiment of 70 or more, and I was making sure that drawdown control works. So there's no trailing stops. I've put a take profit of 1%, but I'm closing out before it gets there. And I was using a stop loss, so it will remove stop losses. It can leave stop losses. It does all sorts of stuff, which I won't go into now because it's, as I say, it's early days. But yeah, got a lot of grief from fellow trader friends recently when I said I don't use a stop loss most of the time. They gasped, "What?" Then they saw all the green on my positions. Yeah, you get that all the time, Franco. I get that all the time. Doesn't matter what you do, right? Everybody gets stick in this industry. If you put yourself out there with anything, you get stick, because the whole purpose of trading, the whole mechanics behind what we do is people have opposing opinions. Yeah. So when I say don't use moving averages, the bloke that uses moving averages disagrees with me. When I say don't use a stop loss, the bloke that uses a stop loss disagrees with me. When I say take an opening range breakout, the bloke that goes, no, you want to look at what happened yesterday because that's the way it's going today, disagrees with me. Yeah. Trader Tom, very well-known guy, runs a Telegram group, offers signals and stuff. Yeah. When he's doing badly, he gets a load of slack. When he's doing good, you never hear a peep. No one ever goes, oh, you're amazing when he's doing really well. When he's doing really bad, he gets a load of stick. I go and put my position trading bootcamp out there. I get nothing but people on Telegram going, you're an idiot. You don't use a stop loss. Oh, that's all right. I just want 6 figures a year, that's all. But what are you making? Sorry? Are you here because you want to learn? Oh, right, okay. You know, it's just, there's a lot of people out there that just want to burn the world down. And if you're around those people, move away. Anybody that sends me any DM saying your indicators are shit, basically I just immediately block them because I can't be bothered. I've been in the argument so many times, I can't be bothered to argue anymore. If you want to use a stop loss, go use a stop loss. That's fine. I make 6 figures a year without one. Up to you. That's it. That's my argument. Either listen or don't listen. That's what you got to say, Franco. Turn around and go, well, look at my P&L. As soon as you show me your P&L, immediately then, as soon as you, and this is why I don't show my P&L much at the moment, because I get a load of stick from people accusing you of all sorts of things. That's fake. That's a fake MT4 account. Like, well, I haven't got time. I don't know how to. I haven't got time. If you say so, block. Just shove them away. Get on with earning money, basically. That's why my Telegram, my YouTube channel, I have 30 to 50 people in here a day. I don't have 100, 1,000 people in here a day. I don't want 100 or 1,000 people in here a day. I want people that are interested in learning how to actually get money out of the market, not how to get a Lamborghini and sell a course. Those groups have got 1,000 people in because they're promising the earth. It's a difference, isn't there? Got a lot of wax on my surfboard. Yeah. Yeah, just shut them down. I used to fight people, especially in Telegram. Telegram is where I get most of my stick, DMs in Telegram. And I used to fight with people, and it used to make me cross. Like my wife used to say, my wife can always tell when I'm getting into a dispute with somebody on Telegram because I type really like, it's like, you're typing very fast and very hard. Has somebody upset you? It's like, nope. I just stopped doing it. It's easier to block them. That's why I get negative reviews on my indicators, because the people that buy the indicator and go, I've traded 10 times with it and it's lost every trade. Go and leave a negative review. I don't give a monkeys, really. To be honest, I don't care. Do what you like. I'm not going to argue with you. You haven't watched the bootcamp. You haven't understood what the indicator's telling you, and you're just looking for something to paint arrows on a screen and earn a Lamborghini. Off you go. This is not the place for you. Philip, haha, felt that. Yeah. It's just, you know, you get it on, and this is why I'm out of all Telegram groups. I'm in a few Discord channels to do with my funded accounts, but all the old Telegram groups that I used to be in, which were all general trading chat where people are doing different strategies and talking about stuff, posting charts, advertising their signal services, all that crap. I've come out of them all because all they are is a massive distraction, and it doesn't matter what you say in there, someone is going to disagree with you. And everybody that disagrees with you is possibly right. Yeah. And the one time, I had somebody come in here ages ago and go, oh, you should be using these pivot levels, blah, blah, blah. What it's going to do is it's going to go down to that level and it's going to bounce. So what happened? It went down to that level roughly and it bounced. God, did I get some stick for that? See, I'm right. You're wrong. I was like, well, all right, well done on your lucky one support bounce that you guessed. But show me that working constantly. Shut up. Never heard anything more. That's all you get. It's all about the glory. I'm not about the glory. I'm about making money. Got kids to feed, mortgage to pay. Different world to the Lambo course sellers. Negativity is toxic, and people don't realize that the ideas that sound counterintuitive first are often the best. Exactly. Do the opposite to what everyone else is doing, and all of a sudden you'll make money. There's another guy actually who's got a YouTube channel. I forget his name, but he trades support resistance, and he doesn't use a stop loss, and he's remarkably profitable. It's funny, isn't it? But it's just understanding this. When you understand market structure and what market structure does, if you go short there and it doesn't get you out, you can wait until it goes there and go short again and get out. For me now, it doesn't make sense to use anything but that type of strategy because it works. But when you first introduce people to it, it's like, no stop loss, blown account. The first thing they think of is blown account. That's because you're wasting 1 to 2% per trade. Yeah, if you're going to risk 2% a trade without a stop loss, you're going to blow an account pretty bloody fast. But that's not what we do, is it? So it's just, it's getting... and that's why I kind of put in the very first bootcamp video, the day one, I put in that video at the very beginning an introduction which lasts for however long it lasts for, which is basically, this is laying out exactly what you're going to learn here, right? So give me 20 minutes now. I'm going to lay out exactly what I do, and I'm going to ask you to give this a month. If you're not interested, do not watch the rest of these videos, because this is everything you're going to learn in here in a nutshell. And that video, that bootcamp day one, gets played through about 20 to 30 minutes, and then people stop. So what I'm assuming people do, which is what everybody does, is go, watch the introduction, let's go straight to the strategies. They miss the whole thing. Yeah? All right, this looks really good. Right, so how does you get in? No. And then people come back and go, when you get into drawdown, what do you do? Well, you would know if you'd have watched all this lot, but you didn't, did you? Because all you're interested in is the glory, not interested in learning why the glory appears. But that's what we do as humans, isn't it? We're just interested in money. Anyway, off on a tangent. So yeah, just if you get toxic people, walk away from toxic people. Just say, right, I understand your position. Good luck with your trading. Block. Trading position method, I sleep better. Yeah, you will do. Right, so I've honestly watched each video of the bootcamp multiple times, not because I'm confused, but because I love the style of trading. Yeah. Tony, Nick Sean or something like that, I think. He hedges as well. Nick Sean. Is that the bald guy? Nick Sean. Isn't he selling a course, though? Can't remember. Somebody, I can't remember. Maybe it might be him. If he doesn't use a stop and he hedges, then yeah, probably. Yeah. It might be him. I don't know. There's so many. I mean, I get bombarded. I have my Facebook. I had a new thing pop up on Facebook today for a prop firm that offers to 10x your deposit with them. So they've basically gone this weird route, and they said they've been around since 2017. And I looked at it, and the domain name was registered in 2017. The website didn't go up until the late 2022, though. They started their Facebook group in 2021. So they've been funding people with $250 million basically, apparently, since 2017. Yet their website didn't go live until 2022. There's so much stuff on Facebook on that you get advertised. As soon as you do due diligence on it, it's like blown out the water immediately. You're lying. Where's your socials? Where's your group chat? Where's your support? You know, I can't remember what they're called, but the domain as well ended in a funny. It began with a Z. I can't remember what it was. It was on my Facebook feed. I can't remember what it was, but I think it was something began with a Z and it ended in a .kj, and I was like, first of all, never heard of that domain extension. Anyway, you just got to be careful with everything. You know that. I'll stop ranting now. You're weak if people's negative feedback affects you. Yeah, that's why I started. It used to affect me. That's why I've stopped. I don't argue. I just block them. The thing that I find is when you block somebody from, I don't know, chat on YouTube or from Telegram, they will always find another way. So they come onto Facebook and contact you there. They come onto email and they email. It's like, why did you block me on Telegram? Well, because you're being an idiot. Well, I'm not being an idiot. You're being an idiot. And then it's like, right, okay, block emails. Then I get a Facebook comment, and it's like, when I've exhausted all of the possible ways to talk to me, you'll go away. But people just don't stop, and they just want to watch the world burn because they've not managed to crack it, and they give up. They just want to give up, and they just want to take everybody down with them. You know, there's not many of them out there, thank God. But just human. We all want acceptance from our peers. Thick skin is hard to grow. Yeah. I mean, this is it. This is partly why I do the live rooms. So there's some, accountability in here, and you're not. It's nice to have to be able to constantly talk. When you're constantly talking through your strategy, you're constantly reinforcing it. And like somebody just said, like David just said, watch the bootcamp multiple times. The more you watch something, the more it gets ingrained in your brain. The more you stare at charts, the more you see these patterns unfold. And you've just got to do things over and over and over again. Whereas when I'm in here every day doing analysis, I'm constantly reminding myself, where is the bias? What is going on with sentiment? Looking at everything, what's going on with everything because you're doing it every day. That's important. That repetition has got to be done. This drummed into me at an early stage in my trading. You need to be sitting in front of charts for a good 10,000 hours. Not necessarily sitting in front of them and watching them go up and down. In the strategy tester, watch stuff unfold for thousands of hours, and you'll suddenly become, just in tune. It's like the Matrix type thing, isn't it? You see something going parabolic, it's coming down. Why? Because you've seen it happen so many times. It just always does it. Because it's going to do it. You just know that that's a good sell today. Where it's going to go to is the problem. That's what we never know. But if you get into it short, you've got a good chance of making money on that. But it's only through repetition and seeing it over and over again. So anyway, so Aussie, New Zealand is the only thing we've got to look at there. So buy a scorecard. If we look at all the current buys and sells, I will concentrate on just the buys and sells for the minute. So the US dollar this week, we've got news, obviously. So the US dollar CAD is a strong buy. We're in a pullback at the moment. The bias on it is a +9. So retail are short at the moment. COT is long. So retail, obviously, we want to be going long because they're all short. The fundamentals are all advantageous towards the US dollar. So whenever we get a strong US dollar, the US dollar CAD will tend to be bullish because the CAD is always a couple of steps behind the US dollar. So we've just run straight up into resistance. So obviously a load of sell orders are triggering at the moment. We're pulling back on this push. So the market structure is long. So expecting a break of that high at some point, probably on the news on Wednesday. So it's Wednesday, isn't it? Or is it Tuesday? Yeah, Wednesday. CAD. Yes, we've got the CAD CPI figures. And then we've got PMIs for the US. So tomorrow, potentially, a good push on that one. So waiting for that to pull back. Looking at the hourly RSIs on it for reason to get in. Propulsion, that's not a very good propulsion gap because there was no accumulation before it. It was a part of a pullback. So you've got yesterday's low in there, which is here. But anywhere kind of in that area would be good. If we get an hourly extension to the downside, good opportunities getting long on that one. So starting to get that strength in the US dollar finally. Hopefully it's not short-lived. Obviously, when the Fed come out on Wednesday with FOMC, there is possibilities that they are going to bring the expectations back a bit. But I think what they're going to do is go, right, interest rates now, we were talking about 5.25. Now we've got a possibility of going up to 5.5 because unemployment hasn't been affected by it. In fact, it's come out better than expected. Every single number we've had has come out more bullish than expected. It's all good news. So interest rates, we think we can push higher, will be bullish US dollar because there'll be more money flooding into the US because the interest rates will be the best out of all countries. You're going to earn more money, you're going to get more investment. So should be good for US. So looking for pullbacks and longs on that one. US dollar yen is also a strong buy. Everything's on side on the US dollar yen. So yens, I'm still confused as hell on the yens. It's all about the yen intervention still. The US dollar yen was what started the yen interventions when we hit 150. So that 150 level, as soon as we got there, that is when we got our first intervention. Yeah, so 150 is there. As soon as we surpassed it, that big candle there, boom, was the first intervention from Japan. And they said, nope, wasn't us. Like, well, sorry, but it doesn't move like that. That was actually the first one, wasn't it? That was the one they denied. Yeah. And then it was like, well, no, nothing to do with us. And now since then, we've had nothing but interventions. So waiting, I think, for that sort of movement. However, obviously, if the US dollar is strong and the yen is going to power up, we're going to get more of an accumulation. So I think there's chances that we're going to go into a kind of range bound situation with this. So of all of the yen pairs, the US dollar yen is probably the one I would buy. But I need it proper extended so that it's got a chance for a profit take move. So I want an hourly extension or a 4-hourly extension to the downside. We've got a lovely propulsion gap there. Thanks for the follow, whoever that was. Adeline Pinto. So yeah, good moves to the downside potentially on this, or a move to the upside. But I don't think we're going to get down here. It would take a lot for it to get down here. But, you know, a yen intervention is a good 200 ADR move. So we'll see. But they haven't done anything for a while. So I'm unsure on that. All the other yen pairs, like the Swiss yen, the Euro yen, they're all buys. However, they're only buys because of fundamentals with most of these. Because we've got basically the yen always on a negative 0.1 interest rate. But yeah, it's one of those things with the yens. I'm unsure. I'm staying out of all yens at the minute. Sentiment wise, I'll take them. When we've got strong retail sentiment one side or the other, but I'm unsure as to what we're doing with all these yens at the moment. They could go either way at any time. You know, we're getting a lot of big moves and then accumulations, and then big explosive moves and then accumulations, that sort of thing. So in a theory, I think you can take it either side and you'll be fine. Yeah, if you take any long or any short on it on the 4-hour, I think you'll be all right. However, I'm more interested in just shorting it because you're safer. If the yen does get intervention, you're safer being short than you are being long. So euro yen, but again, euro massively bullish at the moment. Lagarde pumping the euro. Everybody's euro's going in the right direction. Rates are going up. Everything's happening good. Same as the US. So I'd much rather pick a pair to short like the pound, because the pound fundamentals are terrible. So you've got your 4-hour extension there. You had a nice little trade there, but I'd be looking more for that one short. We're getting back up into the propulsion now as well. But anyway, so there's your yens. So the other one we've got long is the euro pound. If there's any other pairs you want to look at, obviously let me know. But I'm going to go through all the sentiment ones and all the buys and sells on the buyer scorecard. Euro pound, again, longs on this one. So every extension to the downside, looking to get in with a long. It's been quite tricky to get into. So we had one entry down here, and we had an entry just about there, which would have been 2 positions. I think I was in that one actually. So any kind of extensions to the downside, euro, yen, be looking for longs. Hourly RSI extensions to the downside, anywhere down here, be looking to get in long. Did get a little bit extended there, but you know, the pound is not strong at the moment. The euro is good, so we should be looking for any signs of weakness in the euro pound to get in with long positions. So if we can get a pullback down into this propulsion gap, this is a lovely one there. Be looking for long opportunities to get in. So market structure on it would expect to be long-term long. Yeah, so just looking for any kind of pullbacks just to jump in on long trades basically with that one. At the moment, it's not extended anywhere. So no real opportunities. But this is really where you want to look at. If we get an ADR hit to the downside on it or anything like that, RSI extensions looks good. So short-wise, Aussie New Zealand, we've already looked at that one this morning. Bear in mind with all of these, yeah, ideally we want this to line up, which is lined up beautifully at the moment. So if you've got things like that where you've got sentiment disagreeing with retail, waiting for that retail is a better idea, because all the time that they are shorting this, it's going to be pushing. So if we want to get short on it, because our bias is short, we ideally want them to be going long on it. So Aussie New Zealand, but it's a good sell where it is at the moment. You know, this is a great example of retail sentiment, isn't it? So Aussie dollar, New Zealand dollar. Yeah. If you look at the COP, Aussie dollar, New Zealand dollar, 91% of the market is short on this at the moment. What's it doing? Rocket. Yeah, they're all short. Just keep squeezing them, squeezing them, squeezing them until there's none of them left. And eventually that 91% short, yeah, will start to wane, and it will come down and down and down until it comes into a neutral. And when it comes into a neutral, the market will be able to change back, go the other way. As soon as this starts going down, you know, they will start to buy it because it's pushed up. And as they start to buy it, they will just keep taking their stops the other way. That's what they do. So when you've got that slightly disagreeing, as we have at the moment, it doesn't mean it's not a good one necessarily to take, because that is going to have to stop. There's only so much time they can be wrong on it before they suddenly all give up, and then they'll flip back the other way. And that's when that will really start to move. So any extensions on this, I think, are really good opportunities to get into at the moment. These guys will all stop out and they'll all give up at some point. Pound New Zealand, again, really another good short opportunity. We're up at a really good level on this at the moment. So the pound's had a good strong day on Friday. But as you can see, this is a really tight. This used to be the best. This used to be my favorite pair. About 3 years ago, 4 years ago, this was the pair I loved. It was about 350 to 450 ADR. This thing moved like that. It was amazing. You got so big moves out of it from different support resistance levels. Sitting at 151 at the moment, tight as anything. So New Zealand dollar, expecting that to power up with the rate increase, assuming we get that 4.75. If we don't get that 4.75, probably weakness in New Zealand. So we need to wait and see what happens. But if that 4.75 rate comes out on Wednesday, yeah, we've got a really good opportunity for New Zealand dollar strength. So trying to get into a pound New Zealand this week would be good, because the pound is the weaker of the bunch at the moment. So we're pushing up at the moment above last week's high and Friday's high. We've also got that level there. Is it Friday's high? No, sorry, it's Wednesday's high. So it's last week's high we're basically pushing up against at the moment. So again, really good levels coming up on this one. You're not far away. An ADR hit on this today will take out the monthly high, which is here, which is January's monthly high. So if we can get a push up to there ahead of the news, beautiful short. We're almost extended on the 4 hour, hourly, potentially. Yeah, we are extended on the hourly. So again, this is a good entry really here today as well. So M15 or M5 reversal alert to get into an initial position on this one is a good looking short. Starting to fade a little bit up at the high of last week at the moment. So again, when that breaks down, obviously on the lower time frames, you'll get reversal alerts. So looks good for shorts. Playing it all the way back down into there and potentially further. We get that strength on the New Zealand dollar. So like the look of the pound New Zealand short. All the rest of these are the US dollar majors, pretty much. So we've got the pound US dollar, euro US dollar, New Zealand dollar US dollar, and Aussie dollar US dollar. These are all basically, so what we're saying is US dollar strength, right? So we've got COT bias basically with most of these giving us a negative, apart from with the euro. So the euro US dollar is kind of the more neutral one at the moment. So depending on what happens with sentiment on that, that will probably drive that. So when you got a strong against a strong, you get a neutral, which means you get range. So euro US dollar, fairly range bound at the moment, as we can see. So it is more biased strength towards the US dollar. So as long as we're getting US dollar strength, we should see that pushing. We've had massive US dollar strength over the last week. So we are due a little bit of a pullback, a little bit of weakness on the US dollar while it has a bit of a rest ahead of FOMC. FOMC on Wednesday evening is when we're going to really light the candle on this one, I think. All depends on what the Fed says, though. You know, they are notorious for not so much cocking it up, but accidentally going and dumping the currency when they should be pumping it. So euro US dollar looks good for shorts, but it's not the best for bunch. So I just seen what BFT said. Yeah, people being negative psychologically means they're projecting their fears or failures. Cool, that's psychological. To someone else, and often they don't want to take accountability for their own mistakes. Yeah, that's look at you. You've probably got a psychology degree, haven't you? Yeah, that's it. You know, it's I guess that's probably right. I don't know. I've never been one of those. I've never been one of those people that whenever I've been in groups, I've always been the person wanting to learn, not the person wanting to pump the charts out there and go, hey, look, I just got a 10 to 1. Usually because every time I've done it, I've got shot down. So, and that's why I always say in the Telegram group, don't post your profit. Post the reason why you took the trade. Let everybody learn from it. Don't say, hey, I've just shorted gold. It's always gold. With 15 positions and made a 22% increase. Why did you take the trade? Tumbleweed. All goes quiet. So you basically were lucky, weren't you? You pressed the button and you pressed it, and as you pressed it, it went down and you suddenly got into a profit. You broke even and now all of a sudden it's running. You're not a good trader. Yeah. Most of the P&Ls are like that, aren't they? And then when you say, why do you take it? It's like, oh, I'm not telling you my strategy. It's secret. All right. Bye. Good to know in US dollar CAD. Gas is down 20 cents from last week. My fundamental indicator. Yeah. Aussie, New Zealand really pulling in FOM crowd. Yeah. Thanks for the follow, Jazzbox. I've got my volume turned down really low today. I can't hear anything. It's because I was using Tick Strike on Friday. Oh, no, not on Friday, on Thursday. So you can probably tell, by the way, I haven't mentioned my arm. I'm on these new drugs for my trapped nerve. It is still hurting like mad. But these new drugs are helping. I didn't get much sleep last night. Still can't find a position that's comfortable to sleep. But anyway. At least I'm a little bit more back to normal. Anyway. Yeah, so an important thing about the Canadian dollar, just before we go on to these US pairs, is oil. So oil affects the CAD because obviously the CAD's one of the CAD's main drivers is oil because it's its main export. So oil has been really, really stuck. I was looking for a way into oil last week. down on the hourly, wasn't it? It was here. So I was looking here for an entry last week. We missed it and it went without me. And then actually what it did was nothing as the week before. It did nothing. It went sideways. And then we had this massive sell-off on Friday. So from a trend perspective, what we've got at the moment with oil is obviously we've had this massive downtrend and we're putting in basically a rounding bottom at the moment. So we've got the market structure shift, which was there. That was the first market structure shift that held, pulled back, and actually made a new high. Then we double topped and pulled back, came up, made a new high, triple topped at resistance. And since then, we haven't managed to make a new high. We also haven't made a new low. So what we're doing now with oil is we are stuck in a range here. So until this range breaks out, we don't know. But oil is forecast to go over $100 a barrel this year, mainly because China has come out of lockdown. And the reason the oil price has been dropping is because demand has been dropped dramatically with China. And the supply has carried on. So they haven't managed to cap the supply as much as expected. Therefore, obviously, we've had price decreases. They've been forced to decrease pricing as well, partly obviously to do with what's going on in the Ukraine, but also because of the crisis with energy prices at the moment. So it is forecast, though, to increase. So the demand is now suddenly increased. And what we've seen is a stop in the decline. So we are not bullish yet, but the decline we've had has stopped. So we've just been constantly driving these new lows in. Yeah. Bang. We drop down again, drop down again. But now we haven't. So we are looking like we are starting to bottom out here. So any kind of pullback, good for long opportunities. So RSI extension on the 4 hour here, we just got on Friday. Your entry was in the New York session on this, basically. But yeah, it looks pretty good for longs from where it is right now. Massively extended on the hourly. I never take any trades on a Friday, so to hold into the weekend. Not if most of the time I'm just not interested. So I missed it on Friday, but we got the reverse alert on the hourly as well. It came straight out of that propulsion, which caused that attempt to make new highs, which it managed to do. So this looks really good long from here. We're going to run into trouble here. We know we're going to run into trouble here because this is that double top going back. So this is the real crux here. Yeah, this is what is stopping oil from making its move at the moment. So where we are in relation to the range is bang in the middle of the range at the moment. So I always say we want to be taking trades from the extremes of the ranges because that's why partly I use the RSI, because the RSI tells you there's been strength in a direction. If that strength causes a liquidity run or a double bottom or a new lower high to form, that's where I want to be in, ready for that profit take move to start and hopefully kickstart a move to the upside. So where we are right now is bang in the middle of this range, which is not the best place to take a trade. However, if you get in now on this, you may find we get a liquidity run at yesterday's low. Failing that, we will come and run at the monthly low, which is there. Yeah, that's the February low. So if that does happen, as long as that is not invalidated, you could be scaling into a position which you can hold for a run on those highs, which would be a really nice profitable trade. So I really like oil. And obviously with the Canadian dollar, as this does this is going to help the Canadian dollar strengthen as well. So I like oil, and I especially like that reversal alert that we've got today on the hourly and last week's entry, but it's a beautiful W pattern, good strength. And this morning it looks like we're trying to sort of rally, but we got this resistance basically to get through first of all. But like it from a fundamental perspective as a long, but you can never tell with oil. It's very, very difficult because the drivers for it. Sorry, the DAX has just broken out to the downside further. Anybody that's short on the DAX still? Is anybody short on the pre-market? if you're short on the pre-market today, woohoo! Nice. I've just got those two shorts on from the 5 and the 15 on this one. So, but yeah, really nice drop today. So yeah, really good opportunities on oil, but we need to wait and see. It's very difficult. It's schizophrenic oil, and as I say, the drivers are usually the inventories. But since the Ukraine war, the inventories have not been doing anything. The oil inventories, the market doesn't seem to care about inventories anymore. That's not the driver. The driver is supply and demand, and that is very difficult to establish because of what's going on with Russia and all the pipelines to Europe. So, however, China now being out of lockdown, now accepting coal imports from Australia as well, it's opened up its doors. So the demand is definitely there, which should drive prices for oil up. So I was looking at that because I was looking at something else, wasn't I? Euro US dollar. I can't remember what the link was now, but anyway. So Euro US dollar is the bias, which is a -5. So this is the one with neutral COT. As far as we know, I really don't know what's going on with COT, obviously, and we won't know until Friday. But the euro is strong. The US dollar is strong. Therefore, we're fighting and getting into a range at the moment. So with this one, it's difficult. I think you can probably take both sides of the coin here. Any extensions to the upside or the downside are probably pretty good trades, because as one is being dominant and pushing, the other one will also be pushing and trying to battle out higher. As the US dollar weakens, you'll get that push. So the profit take moves on this will be probably pretty good. I'd have a much more cautious bias taking longs than I would shorts, because I think the US dollar is going to strengthen more. But we'll find out on FOMC on Wednesday what they're going to do with the rates. So, or what they're anticipating doing. So we can't really make a decision on that until Wednesday after FOMC. But take either direction, really, I think, on this one at the moment. Although, as I say, bias is short on it. If retail suddenly decides to long it, then we would want to be shorting it. Yeah, so again, I'd be much more inclined. If you look at the numbers on it, we got -1 for interest rates, +1 for change, negative inflation change, negative GDP, negative unemployment change. So, you know, there is definitely a bias short on this in the US dollar's favor. Pound New Zealand, did we look at that one? I feel like I've looked at that one. Oh yeah, that was the one we were just looking at, wasn't it? Hitting those highs. So yeah, Aussie dollar, US dollar, and New Zealand dollar, US dollar. Only take one of these because they're very, very similar. Aussie US bias short. Obviously, we are now breaking back down below the 72. So there's one of two things at play here. Either the bounce at the 72, however, fundamentals have shifted. And this is why I've set up the fundamental system on my website to make sure this data is all easy to access, because it's important to know that the actual fundamental bias on this is short. So when we get these 72 bounces, and these 72 bounces are against fundamentals, we know that there's a potential for that to be a market structure short, which is where I got stuck with the Aussie New Zealand last year, trying to long this bounce. Yeah. What I didn't know was at that point, the fundamentals had shifted against me. And that's why I got stuck in that long, because what I'd been doing was making tons of cash out of this all year. And I was like, right, brilliant, back to the 72, let's get the next leg. Unfortunately, the reason that got to the 72 was because the Aussie dollar fundamentals completely shifted. So again, probably a pullback. And we've just double topped as well, if you look. So this is a really good level, obviously, for shorting from a resistance perspective. And now we've got that US dollar strength on side, which has caused that massive drop. And the Aussie obviously couldn't fight back. We've now made a new low. We're pulling back for another new low. So H1 RSI extensions, which you've got right now, ready for shorts. So again, just scale into this and get on those on that next leg down. Dropping down M5. You had a reverse alert and a retest. So this is actually spot on, literally right now, for a short Aussie US on M5. M15, you haven't had the reverse alert on M15 yet. So If you're trading H1 though, you're probably using 5-minute time frame for entry rather than 4-hour and M15. So looks good for shorts. And again, just nice pullback, very, very orderly. Look, that's exactly where I would expect a pullback to start, as long as we don't invalidate that area there, i.e. we don't break and hold above yesterday's high, which is previous day's high, which is Thursday's high. As long as we don't break and hold above that, should be fine. Good for shorts. So yeah, that's Aussie US. New Zealand's US, very, very similar. The difference between these two is obviously New Zealand's been a bit weaker moving into obviously the new rate announcement we've got coming out this week. So I'm just watching the DAX sitting in this propulsion gap. From Friday, very, very well respected this area. We had a lot of buyers stepping back in here, so just keeping an eye on my other monitor. DAX just seems to have completely stalled down there. Like liquidity just dried up, and it's not really ticking or anything, so it's very, very little. It's just not moving. Look. Very, very little movement. We've run out of liquidity, so it doesn't look like there's any buyers left here. So, however, you know, we're going to want to pull back into here. So this propulsion gap at the moment, I would say, tricky one. This one on M5, look, that's the actual low. So this is actually the propulsion gap that caused the break, but the break actually started there. Looks like we're just about to invalidate that zone as well. So I'd be looking for pullbacks potentially into there, maybe into there if we're going to continue another leg down. So market structure, that's more of a symmetrical triangle break to the downside. Continue short. But it's good. So New Zealand dollar, US dollar, yeah, as I say, taking one or the other of these. The difficulty we've got this week is we've got the New Zealand dollar rates on Wednesday. So there is a chance that we're going to see the New Zealand dollar power up, which means obviously this will push. And then obviously we've got FOMC on Wednesday evening. So the potential play on this would be a push and then FOMC to undo that push. It's just not positioned right at all at the moment, New Zealand dollar, US dollar. We want to see it on a pullback, ideally. So it's, you know, support and resistance is absolutely spot on it at the minute. But I think we've got potential for a fairly strong move up. So I think really back up into this zone here. Just draw in with that low there. So somewhere up there, if we could get up there, I think that's a good place to short it. It might take the news to get it there. But then again, I think we'll probably find US dollar will step in on Wednesday evening and push that back. I'm just toying with the idea of actually shutting this this morning. We're running out of steam, basically. Depending which broker you look at, that is either now completely filled that gap or almost filled. On my other platform, that wick is actually a little bit higher, and we've actually filled that completely now. This looks like it wants to pull back. What I'm worried about is this actually, we've run out of sellers basically, and all we're going to do now is kind of flip-flop. So potentially this is the peak low of the session. It might not be though. So I haven't really got a lot of profit locked in. So what I'm going to do, I'm just going to move my stops down on this one. Why do you keep asking? I need to change that in the options. It's because I keep flicking between accounts on this terminal. I'm just going to break even on the second one. So I'm going to probably stop out on this here. What I want to see is either a nice solid breakthrough And if we don't get a solid breakthrough, I think we're probably just going to do this for the rest of the session because we've just run out of steam. I've been watching this on my other monitor while I've been talking for the last 2 candles. And these 2 candles that have painted have been very, very slow. There's been very little volume in here. I think we're running out of steam. So I'm just going to lock that profit in. So New Zealand dollar, US dollar, yeah. So that's what I'd be looking for. If you want to be super safe on it, somewhere in that zone. The other short we've got is the pound. So pound US dollar. I mean, this is a mess. So since Liz Truss screwed up and Bailey bailed us out, since that V-shaped recovery, we were on course, I think, for a parity hit, $1 on this. I still think we are on course for a parity hit on this, to be honest. So parity's down here. Oops. So that's one. Obviously not like that, but I think US dollar driving the pound down. The IMF has come out and said that the UK is going to be the only country to go into recession in 2023. We are behind on absolutely everything from a fundamental perspective against pretty much everybody. So our interest rates are at 4%. We are still screaming up at 0.5%. Our inflation is still in double figures. No one else is in double figures. Admittedly, we are coming down, but other people are coming down faster. Our unemployment rates are either unchanged or struggling massively. I mean, look at our unemployment compared to the rest of the world. We're in all sorts of trouble in the UK at the moment. We've had 4 prime ministers in the last X months. We just seem to be hemorrhaging cash constantly. There's nothing that really can make us attractive at the moment. So even though we have got high interest rates, which is attractive, it's this is designed to make us attractive. If I've got $1 billion, I want to stick it in the US dollar at the moment because I'm going to earn 4.75% on it. Simple as that. We need to make ourselves super attractive. We will, I think, be going up by 0.5% on the next rate increase. That still puts us behind the Canadian dollar. It's going to put us behind the New Zealand dollar when they go up by 0.5% on Wednesday. It puts us behind there. So we've got the highest inflation, the worst. Sorry, that was the euro, not the pound. There. I was going to say I thought we weren't that big. I was going to say, when did that change? But yeah, when you look at 3.7, we're still massively bad. So yeah, we are just bad across the board, basically. This is the thing that's killing us. This has got to come down faster. And the fact that we're going up by 0.5% at a time, we're still not able to get on top of this is worrying, really worrying. Obviously, commitment of traders has been short on this for a long time. So we have the fundamentals on side. We have the futures traders on side. Everything is on side on this for consistently looking for short opportunities on the pound. So pound against the US dollar as well, which is the strongest currency at the moment. This looks like a pullback on that entire move. So we've got up to 61.8. We've said nope. There's not really a solid level there because the pound's just been in free fall anyway. But we've not managed to make a new high on that recovery. We've made a new low, and now I'm expecting us to make a new low on that. So any kind of pullbacks, looking for short opportunities. So 4-hour RSI extensions and hourly RSI extensions. Hourly is going to be the easier to achieve. So any hourly extensions you get into, yeah, very high probability. If we've had enough strength to push the RSI up here, it's basically probably a profit take on the down move rather than the pound rallying. So drops from propulsion if we get up to there, ADR if we get up to there, even previous day's high potentially if we can get up to there. We just had a bearish engulfing going in this session, so we might not even get up to there. So, but still, shorts all around on that one. On the pound US, it's a massive sell. caught on board. Retail at the moment are neutral. So retail, no advantage or disadvantage there. So there's all your longs and shorts there. Sentiment-wise, have a look through those. Benjamin, how far back do you consider fair value gaps to be considered a confluence, if any? I don't use fair value gaps. That's an ICT thing. I don't do ICT. If you're looking at the propulsion gaps, which I think is a similar sort of thing, isn't it? I really need to go through the ICT course again, don't I? Or find a scaled down version that I can whiz through fast just to get the basics again. But these are wide range bars. So this indicator is called the wide range bar indicator, WRB, hidden gap. Yeah. So this was created by this bloke back in the day. Yeah. So this strategylab.com. This is the founder of the wide range bar strategy. ICT's used this and called it a fair value gap, but it's the same thing. Yeah. So you can see how old this website is. Yeah, this was way before ICT. Yeah, so this is the founder of what he calls a fair value gap. But I think there's different rules for fair value gaps, isn't there? I don't know. I don't follow them. At the end of the day, whatever you want to call these, they are propulsion candles, impulse candles. I get this question virtually every day. It's covered in the bootcamp. I should really do a video on it, shouldn't I? Explaining what it is, so I can just send people to it. But at the end of the day, it's a large institutional order. Yeah. So what these lines show you is where the big money started the move. DAX is just coming down into the second wide range bar from Friday. So accumulation break, potential add. So the way that I have always used these, I found this before I found ICT. And that was why I kind of found ICT, partly because I was interested in this concept. But he had more complicated ways of these being done in relation to order blocks and other stuff, which I just struggled with it, to be honest. It was too complicated, and it was all stuff I knew about already, but it was too complicated. Complicated way of, I don't know. It's like reading a kid's book and then reading IC or watching ICT's videos. It was like overcomplicated way of explaining something very simple, I found. But that was just me. I'm just not. I haven't got the patience to sit through what he was teaching. But all this is a propulsion gap. Yeah. So whenever a large market participant can not get his orders filled in a orderly manner, we have a propulsion move. Typically, news is used for propulsion moves, obviously, as we know. And that causes a wide-ranged bar, WRB, fair value gap, propulsion candle, impulse candle, whatever you want to call it. It's just a big move in the market where we know there is a large amount of selling. When price moves away from those areas and returns to them, if the sellers are on board, they will add to their positions to drive the market further away, which is why they're marked on the chart. These are areas of interest for two reasons. First of all, if we're long, we want to get out here. If we're not long and we're looking to get in short, that's a good spot because the institutions started their move there. So there's a good chance that they will do it again. That's literally all they are. I don't know how complicated and how much detail he goes into with his fair value gaps, but that's my explanation of wide range bars. That's literally all they are. A way to identify institutional orders. So you put it all together. If we have a -8 on the buyer scorecard, fundamentals are all saying we need to short. COT are all short. The commitment of traders on the futures market is short pound, long US dollar. If retail are all longing the crap out of it, that will be a -2, which means we need to short it. So this will be a -10 over here. If we've got that and we get to one of these, by pushing up into it, I want to be selling it. That's literally all it's there for. So I will wait until we get to that area, and then I'll drop down into M5 and take a reversal up. When the market starts to move in my favor, I'm short. Yeah. I don't know if that's the right one or not. No idea. So what could happen is if it pushes up into there, I short it, and then it will push up further, in which case then I'm going, right, where are we going next? Somewhere up in here. So I'll take a second position up there somewhere and wait for it to come down. Because by the time it gets there, RSI will be extended and we'll be ready for a profit take move. And as that profit take moves, we will form a propulsion gap, because it will be a big, strong move in one direction. And then when we come back and retest that propulsion gap, you have a second chance to get in, usually forming an M pattern reversal, or rather that sort of M pattern reversal. So what we get is a push up, propulsion move down, forming a wide range bar, push back up into it, push back down, M pattern reversal, which will be formed on your chart by a reversal of that. Make sense? I see all the time gurus take a chapter from John Murphy's books, then create a new idea course, Fakes and Criminals. John Murphy, that's a name I've not heard. I'm surprised I've not heard. Who's John Murphy? Composer. Technical analysis of the financial markets. He's chart patterns, flags, pennants, trend lines. It's very, very, very old school, isn't it? Old school technical analysis by the looks of things. Yeah, look, this is all. So wedges, triangles, symmetrical triangle breaks. There you go, bullish symmetrical triangle. I've got an indicator on that. I didn't even know it's anything to do. Is this the guy that made symmetrical triangles then? I've never heard his name. I don't know why. Maybe I have. Maybe I've just ignored him, because I've probably looked at all this stuff and gone, well, that's just stuff that is taught generally. Yeah, symmetrical triangle break. Look at that. My God. That's exactly what the symmetrical triangle does. Six points. Well, I never. There you go. So I am one of those fakes and criminals. I didn't even know. I've never heard of him. But it's just chart patterns, isn't it? See, all of this stuff is taught by many people. This is the basics, isn't it? I mean, this is the basics of fundamentals, of technicals, chart patterns. So, yeah. But that's what the symmetrical triangle pattern indicator is. So we're using 6 points. 1, 2, 3, 4, 5, our signal to get in, and then 6 is the break. There you go. Well, I never. John Murphy. Is he dead now, or is he still alive? 2018. No, he's still alive. Map the trends, spot the trends, go with it. Find the low and high of it. Know how far back to backtrack. Draw a line, follow the average, learn the turns, know the warning signs. It's all market structure. You know, everything comes back to market structure at the end of the day. Everything you get taught to do with, and this is why I am about market structure, because every single pattern is part of a formation of market structure. Symmetrical triangles, you know, when you get a push up and you get a symmetrical triangle form, that is part of a market structure breakout. We're not going to come down and make a new higher low. That's the higher low. Yeah. So every pattern is within the structure of the market, which is what I think is the most important thing. So a channel breakout, someone might teach you, is basically a market structure pullback break. isn't it? Which you will get a reversal alert on with a W pattern. You know, this is what I mean. And I say it in here all the time, don't I? It's the same. Everything you see online, everything you are taught in every course, it's all the same thing. And it all boils down at the end of the day to one thing: market structure. And if you understand market structure, that's all you really need. And you just need to wait for points where the market is exhausted in the current structure, and you are expecting the market to make a profit take move on whatever's caused that exhaustion. It's all simple, isn't it? Franco, they all steal from him. Yeah. Yeah, never heard of John Murphy. I might have done. I might have heard of John Murphy many years ago, maybe. But again, it's all, you know, if the only reason I know people is if people quote him. If I've done a load of courses on chart patterns, or bought books on chart patterns that weren't by John Murphy and by someone that's basically replicated his work, I would say it's that person. You just don't know, do you? Who invented stuff, who came out with stuff first. But it doesn't matter, does it? It doesn't matter who came out with it first. Just, if it works for you, use it. You know, I've got lots of people using the symmetrical triangle pattern indicator. I made it because I started using it and I started making good money with it. But then I realized actually, it's just telling me pretty much the same thing as I already know. But a lot of people are using symmetrical triangle patterns and they're doing really well. But it's just one pattern. There's loads of them. My hero is John Ehlers. Never heard of him either. John Ehlers. Quantitative analyst, chief scientist and president at Mesa Software. So he sells software. Market cycles. It's all market structure. Same thing. Market cycles. That's your buy and your sell cycles. Like, you know, same as I teach is, or same as I trade. It's exhaustion, profit takes. It's market cycles. But you market cycles in threes, and you know, this is the thing with it. Yeah, with all stuff, it all works some of the time, and it doesn't matter how good you get at market cycles, Elliott wave, anything out there. It doesn't matter whether you'll become an expert. I'm an expert in candlestick patterns. I'm an expert in market structure. I'm an expert in support and resistance, only because I've self-taught myself over 15 years to become an expert in them. Doesn't make me a good trader. So you can read as many books as you like about candlestick patterns, and it will tell you all the time a bearish engulfing is when you go short. Where a bearish engulfing appears, though, is the most important thing. And what happens after you take that bearish engulfing is more important than anything. But if you can identify a head and shoulders pattern, it doesn't make you good at trading head and shoulders. There's a beautiful head and shoulders pattern forming right now. Is it a good long signal? No. Because market structure is short. It's a good time to get in short at the right shoulder, because it's going to be a failed head and shoulders. But if it's not a failed head and shoulders and it works, that is the most important thing. What do I do after I've got into the trade and it's gone against me? That's the thing that makes you the money. Becoming an expert in anything is irrelevant. And market cycles, you know, what BTMM used to teach, the 3 pushes. Yeah, it's great. The 3 pushes works sometimes. It doesn't work other times. But knowing the 3 pushes will help you if the 3 pushes is going to work. If the 3 pushes isn't going to work, and after push 1, pull back, push 2, pull back, you get in long for push 3, and it does that and makes a new market structure low, what do you do there? That's what makes you the money. Knowing what to do when the 3 push fails, when that market cycle has gone wrong. And that's what I do in the course, is show a way to trade regardless of what the outcome of your initial idea is. Extract money from the market regardless, using those cycles. That's the difference. You know, it doesn't matter how good you are at spotting the spring on a wick-off move. Yeah. Right. So the wick-off spring here, anybody that trades wick-off's really gone quiet. It was a fad for a bit. But you got a long push, you got the wick-off spring, You've got the accumulation at the low. Perfect. Let's get in short. Oh, crap. What do I do now? Take another short because, oh, not quite. Would have been perfect if that was extended. But because we've got an RSI extension, we're expecting a profit take. So we now give ourselves an exit on that position because our entry failed. That's much more important than identifying the wick-off spring for me. That's what makes me the money, not the fact that I know what a wick-off spring is. It doesn't matter how many books you read. None of them help you time the market. They will all tell you when to get in, but all that ever happens when you get in with a stop loss and a take profit is you either lose or you win. That's the only outcomes. It's a positive or a negative. And because you're not able to hold those winners, it's always a negative. Your risk-reward ratio is never positive because you can't hold the winners. Because psychologically you can't. So remove that part of the psychology in order for something to become profitable. That's what I do. So it's just, all these, everything. There's only so many ways you can teach the same thing, isn't there? If you think about it, what can the market do? Yeah, from here, it can go up or it can go down. So what we can do is say, right, well, let's look in history. Is there a similar point in history we can look at, and what happened there? That's all we've got to go on. Everything you read in any book is based on historical patterns repeating themselves. The chances of the historical pattern repeating itself at any point in time is 50-50 because there are only two outcomes, up or down, over the next X hours, minutes, weeks, days, depending on what time frame you're trading. So regardless of how good you are at identifying an accumulation, the accumulation break is 50% up and 50% down. Which way you go is what makes you win or lose. If you go up here and it goes down, how you manage the trade and exit with no loss or possibly a profit is how you make money. That you got wrong. So it doesn't, as I was saying in the course, it doesn't matter how you get in. You need a way to get in, which I use market structure, but I'm wrong most of the time because I'm not in control of the market. The banks are. So, theory is useless. If I've taught my son to trade, yeah, for fun in the summer holidays, I said to him, get in, and when basically you get in, if you get into $100, bank it. If you don't get into $100, wait for it to come down to a level. And I taught him how to draw support resistance. I said, when it comes back down to there, get in again. And then when you get $100, get out. He made a profit. Well, at the time, he was 12 years old. Yeah, because he doesn't know chart patterns. He doesn't know price action. All I taught him was draw lines at the areas there. And I gave him yesterday's high-low indicator. And get in and get out. And I told him to get out when he had $100 in profit. That's what he did. He just kept getting out with $100. He had no, and you can teach anybody that, can't you? Look at your P&L. When you got $100 in it, bank it. Simple. You can't go wrong. Because the market, as long as the market goes up and down, you're going to have $100 at some point. Yeah. That's just one position, but $100, bank it. $100, bank it. Yeah. These ones, wait. When that one gets to $300, add another position. When it comes back to $100, bank it. Just keep sticking it over there. Really easy. That's it. Franco, no, you teach how to win. Yeah. So pound US dollar, yeah, looking for shorts. That was the last one, wasn't it? Anyway, then we're going to look at sentiment. But Tiki, I know, but could you tell me what you have found best for the RSI? H1M5 to look for market structure break, i.e. 60 or 70. Okay, forgive me. I'm very selfish. I tell no one about you. Why give up my edge? Yeah, I don't care. It's up to you. I don't want a busy room. Just watching the DAX. Sorry. I'm just moving my TPs down on the DAX. We've got a very small propulsion gap here. This is only the second push down, but we are getting exhausted. I've been watching this for the last 15 minutes, and we are rounding. We've got long wicks to the downside. We're just putting a nice big bullish candle in now. So we're either going to get a couple of bar pullback and then a drop, in which case I'll probably stop out on this and take the profit on these two. But I mean, it might just obviously pump, but I'm just worried that we're going to find some buyers. We had a very bullish day on Friday, so obviously the market is bullish. So just be careful if you're short DAX. So yeah, RSI. I use 70 basically. So my RSI dashboard's set up for 70. So it only starts monitoring from 70 and 30. Steve Mauro uses 68. Other people use different numbers. I use 70 because it's a nice round number. And like I say, there's no, the difference between 68, 70 and 72, don't know, don't care. It's not, what I'm looking for is, have we had a strong push? If we can get to 70, I class it as a fairly strong push. So if we push strong, I need to have a look at it. And this is all this is. The RSI is not an indicator to get into a trade. The RSI is a, right, Aussie New Zealand is extended. Let's have a look. Brilliant. Right, let's have a look at the Aussie New Zealand. Where are we? What's going on? Okay, we're in a bull trend, possibly on a pullback. We're extended now above 150. RSI is massively extended. We're going to profit take at some point. Where are we going to profit take from? Let's find some levels, draw some levels in. Yeah. So that's basically what the RSI dashboard is telling me, is go and have a look at your charts. Something's going on. That's basically it. Now, right, we're massively extended. Good opportunity to drop down onto M5 for an M pattern reversal. Break that low. You're not going to get a reversal alert because of the strength of the push, but if you wanted to take, that is a good market structure reversal. The way the indicator works is on the last down candle, so it's not going to indicate that one, but there. That's it. RSI is extended. That's whether you use 70, 75 or 80, you get the same signal there. But other times, if you're using 70, like there, for example, you wouldn't have got an alert there on 70. You would have got an alert if you'd have used 68. But then I can give you loads of opportunities where you should have, if you use 68 there to get in short, you got into a squeeze for a day. If you'd used 70, you would have started monitoring it here, not here. So you wouldn't have had that squeeze. So it's horses for courses. Whether you use 68, yes, I got that one, you didn't, haha. If you use 68, I go, well, I got in here, so I got a better trade entry, haha. You use 68. Doesn't matter. Use one or the other. It's irrelevant. I see Wales, Captain Lee, Aussie News. Yeah. So this is pulling back beautifully now. Look. It's a lovely M pattern short. Back down into somewhere. Don't know. But if you're getting in short, get in short. When you've got enough money in your pot, take it out. This thing could be, think of it like a dolphin jumping. Not a whale, or a whale jumping. Yeah, what are we expecting to happen on Wednesday? Interest rates to rise on the New Zealand dollar. What's that going to do for the New Zealand dollar? Pump it hard. What happens to Aussie New Zealand when the New Zealand goes up? That comes down. Why are we pushing? Because we're trying to find some liquidity before that move starts. Or someone knows something we don't. I've no idea. And this is the thing. You know, the best system in the world, the best strategy in the world that tells you you get in here with a 90% success rate. If the New Zealand dollar rate comes out as 4 instead of 4.5, that thing is going through the sky. I don't care if you've got a 90% strike rate on your technical analysis. It's got nothing to do with it. Fundamentals drive this market, and the New Zealand dollar on Wednesday will decide whether this goes up or down. So stop trying to technically analyze it and just get in and deal with it. If it goes that way, brilliant. Get another entry on, wait for it to pull back, because if it goes skyward from there, it's already extended. If it gets extended to that level, what happens? Boom. Typically, boom. We get an exit. We get a pullback. Well, you know, think about this. Everybody in here has learned about flag patterns. It's one of the first things you get taught is a flag pattern. propulsion move, flag. Wait for the flag break, channel break, go long. Yeah. Worst case scenario, you get in here, your trade doesn't work. If you get in there, when the flag forms, you get out of both of them. You might take a small loss or a break even. It's a flag pattern. Worst case scenario, if this thing's going to make another push, you're going to get a flag. They've got to take a bit of profit on this move. And it pulls back usually into a propulsion gap. So if this thing goes skyward for 3 candles, you've got a massive propulsion gap, likely to come and retest it so they can add to their positions. That's your exit. There's always a way out if you don't use a stop. Doesn't matter how you analyze the market, how your technicals are, what you're using, whether you're using this guy's patterns or the bloke that reinvented that guy's patterns, or you're using that indicator that's called something else with this bloke, all irrelevant. It's just a way to get in the market. How you get in and how you get out is totally up to you, which is why I give 5 strategies in the course. They're all great, but none of them are brilliant. They all work and they don't work. It's not about that. It's about controlling your exposure and getting in and out of the market with waves. Vink made profit on the DAX today. Good. Yeah, I'm out of the DAX. Out of that one. Short. Nice little short. Tony, I found an indicator on TradingView that shows me the current and one higher time frame RSI. Well, you got that in the dashboard, didn't you? The RSI dashboard does that. This is showing you the 4-hour and this is showing you the 4-hour. That's showing you the hourly. That's what this is what I built this for, to show you RSI across multiple. Multiple time frames. So my doctor's surgery just texted me. So yeah, that that's what the RSI dash does. You can configure this however you like, but this is designed to alert you to RSI. If you want to only get in when RSI on the hourly and the 4-hourly is extended, Aussie New Zealand is your guy. Visually, you can see it very easily on the RSI dash, which is why I built it. Before I built the EA, obviously all my indicators that I built came before the EA. Now I don't need the indicators because the EA just does it for me when I tell it to. Getting multiple pending orders kicking means I'm on target tonight. On the Aussie New Zealand, is that? Yeah, it's a lovely reversal starting Aussie New Zealand. Look. 150 ADR. I shall be in on that. Not yet, though. I'll be in down here. Right, so let's quickly cover the sentiment. So there's not a lot to look at on combined sentiment, I don't think. So the main longs are the Euro Yen and the US dollar CAD. US dollar CAD. So US dollar CAD's a good entry at the moment. So we're pulling back on this move, or depending on, and again, this is another reason technical analysis fails. Yeah, you give everybody this chart and say, right, where are we going to pull back to? Some people will do that. Other people will do that. Yeah. So who's right? And then everyone will go, wow, you use the confluence of the two. All right, fine. So at the end of the day, when you hit that button, what happens when you do that? What happens when it does that? That's the important bit. Yeah. Not whether that lines up with that and this and when you get in, where's it going? What's your plan? It's going up. I'm going to make money. Brilliant. What if it goes down? Well, if it goes down, I'm going to take another entry there and scale out here with 50% of the trade. And I'm going to reduce the drawdown on that. Brilliant. That's the important bit. Not the button hit is irrelevant. What happens after the button hit is whether or not you get a positive or negative impact on your account. Yeah. So for me, going in long here, I don't know, next reversal, let's say we go long because everything's pointing in the right direction sentiment-wise. Let's say this thing continues to drop down to there. Yeah. So I would have a second position 50 pips away, which is roughly half an ADR. So I'd take another entry there. Yeah. And that is over half an ADR. So I'd be looking somewhere down here to take a third entry. Then because that's moved down so far and so hard, on the 1 hour RSI, we will be extended. Yeah. So I'll be waiting for the pullback on that move. So if it's going to do that, fine. If it's going to do that and the market structure is going to shift to the downside, I get out on the profit take on that move. But the reason for the trade is US dollar CAD sentiment is saying COT is long, US dollar CAD, they are all short at the moment, so we want to be going long. So where shall I get in? Where shall I get in? How shall I get in is up to you. Nothing to do with making money. It has to do with pressing that buy button at some point. You can press it now, which, to be honest, isn't a bad spot. But yesterday's low would be probably the better spot, because when they've taken that liquidity, that's more likely what they were going to do. But, so, it's changing your thinking. Books are irrelevant. Books teach you timing. What time should I press the button when this has happened, that's happened, and these 3 ducks are lined up in a row? Brilliant. Oh, it's gone against me. That's the bit you got to get, not the press the button bit. That's easy. Monkey can do that. I can teach my dog. I've got very intelligent cockapoo. Yeah, very intelligent dogs. Mixed with poodles and spaniels, very intelligent breeds. So I could probably teach my dog when I could program the RSI to make a noise when it's up high and a noise when it's down low. And when she hears the noise low, get her to press the green button. I could teach the dog how to do that. Yeah. She's suddenly learned technical analysis. She's learned RSI extension entries. Does that make her a good trader? No. What happens after that happens, she's now got to think about. And because she's a dog, I can't teach her that bit. You see what I mean? It doesn't matter, does it? How you get in is irrelevant. Seymour, exactly. That sentence just hit the nail right on the head. Get in and get out of the cycle. That is what changed my success for the better when understanding to recognize that. Yeah, exactly. I have one, but not know where I can get it quickly. Sketch score sample of a trade plan. Main important features. I don't know that one, frankly. But yeah, so sentiment-wise, obviously US dollar CAD is a long. Euro yen is also a long. Again, be very careful with these yens. It's a long at the moment. It's still a long. So think about what everybody now is seeing on their charts, right? So we're seeing a strong move to the upside. All the BTMM people now are going, hey, we've had 3 pushes. We've gone into an accumulation. Now it's time for the sell cycle. Right? Everybody's short on this at the moment. Yeah, that's why, because they're all doing the same thing. Yeah, they're all short. 81% of the market is short euro yen. Why? Because they've seen this stop. They're getting in short. So where's all their liquidity right now? Sitting above Friday's high. What would it make more sense for the market to do when it needs to fill its orders? Big orders. Find where the big liquidity is. There. But it's not much of a move up, is it? So we are just accumulating at the moment. Euro is a long, yen is a short, sort of. But I'd be wary about taking that one long today. I'm wary about everything to do with the yen at the moment. I just don't trust it. Euro New Zealand, you've got COT bias slightly long on that. Again, Euro is a long, New Zealand is a long from a COT perspective. Might be getting a little bit stronger as well, that one. However, they are all short on it at the moment, Euro New Zealand. So it's a long from that perspective. It's going long already today. So, you really need to be looking at the sentiment ahead of the market open, because you want to be, London is likely to take it in the direction that we're expecting it to go. So, you want to be taking, that's probably not a bad strategy to use, actually. The London breakout strategy, which is absolutely useless and no one ever makes money with. If you had sentiment on your side at the London breakout strategy, that's probably not a bad entry, is it? What should be the most important feature on a trade plan, not a strategy plan? Yeah. Just taking that liquidity at the high. Everybody's now shorting it again. Euro New Zealand. Yeah, so everybody's now gone super short because we've just taken out the highs. Euro New Zealand. Yeah, 75% of them are short. Let's just refresh that actually, because we've had an update or two since I've been on. Takes a while to refresh. So it was 75%, wasn't it? Now it's 80, yeah? Why? See, is that the difference there? We were 75% when I came on air. We're now at 80%. Why? Because all the smart money traders, and this is why I laugh at the terminology smart money, all the smart money traders are short because we've just done a yesterday's high sweep and now they're all short. Why are you going short against an institutional propulsion move higher? Nuts. They're all short. More of them. 80% of the market is now short. RSI is extended to the upside. Short it. We've just done a liquidity run. Short it. We just had a reversal alert, potentially. Short it. Yeah? This is why I say you can't take everything this gives you. You need a reason. So my reasoning now is actually not to do that because we've got a propulsion gap bounce. Yeah? For me, looking at this as a bare naked charts trader, that's a propulsion gap bounce. All the liquidity is up there. So if you go back out to a higher time frame, M15, we haven't had a reversal alert. We put in a new high, then we get a reversal alert. That's probably a slightly better one to take. We should be going long, according to this. At the moment, this is very short-term trading, obviously. So these are against COT. That one's against COT. That one's against COT. That one is positive. So New Zealand dollar, US dollar, we've got COT on the side and retail. New Zealand US is a short. Coming down so far today. Just taking the liquidity at the lows. I would imagine they're all starting to think about getting in long now. So potentially wait for a push back up into that propulsion gap. Take it short out of there, maybe. Don't know. But you get the point. I'm not going to go through every single one of these. The best ones are always going to be in line with COT because you've got the big boys on side and you've got retail offside. Right, that's all I've got for you today. If there's any other pairs anybody wants to look at, let me know and I can have a quick look at them. I've covered pretty much everything. Gold I don't obviously trade, but I've got sentiment for gold as well now. It's neutral at the minute. 54.46, so there's no advantage on gold at all today. Sideways, not going anywhere. I've looked at oil. I've looked at Bitcoin for ages. What's going on with Bitcoin now? Pushing up. So Bitcoin, all the crypto markets are basically now completely aligned with the stock market pretty much. So whatever you see going on with the stock market is pretty much what Bitcoin is tracking now. So you might as well just trade the the stock markets really. Pound New Zealand. I've already covered Pound New Zealand, but I can have a look at it again. So shorts, Pound New Zealand. Whoops. It's a big short. -4. So we've got COT on side, retail offside at the moment. So I'll be looking for short opportunities to get in on that one. On any extensions. So you've got RSI extension on the hourly at the moment. We've just taken out, there you go. So this is the one I drew in. We've just taken out last week's high. So retail is ever so slightly short on it. So the bias is ever such a slight long. However, everything fundamental is negative. The thing you've got to bear in mind with this one is New Zealand dollar, obviously Wednesday. we're going to get the news on the New Zealand dollar. I'm expecting it to be bullish. So looking for shorts on it. So M5 reversal alert, which you're going to get very shortly, M15. Depending on what you want to do, you know, if you're going to hold it short term, somewhere back down into the middle of the range, because we're range bound at the moment on this one. Very range bound. It's just a mess. This is just a mess, this one. It's just a horrible mess. However, it's a bit tricky, that level. Somewhere around there, I would say. Yeah, I mean, it is ever so slightly bullish because we've had a weak New Zealand dollar leading up into the rate announcement. The reason we've had a weak New Zealand dollar leading up into the rate announcement is because we had a strong New Zealand dollar, and then obviously the rates changed and it's all started to fade basically. So I like it short based on the pound being weak. So even if the New Zealand dollar doesn't get the figures it's expected to get, it will probably weaken, and obviously that will push, but the pound should be coming down over time. So I'd be looking for shorts on it. And it's just about to give you a reversal alert on potentially a stop run. When we have rate announcements, as we have with the New Zealand dollar, what you tend to get is that currency going sideways up until the rate announcement. So whenever we've got big news coming, the market doesn't want to put a lot of money into that currency in either direction, because it needs to know what interest rates it's going to achieve on those. Yeah. So it's just a case of New Zealand dollar, you'll probably find sideways today and tomorrow. And in that case, basically, it could dump an ADR, pump an ADR, dump an ADR, pump an ADR. We've got pound news as well to take into account tomorrow. We've got the PMIs. So again, if they come out as negative, that's going to come down. What I would expect is negative PMIs, or as expected PMIs and negative pound action, and then potentially positive New Zealand. So with a combination of tomorrow and Wednesday's figures, if they come out roughly where we're expecting them to, we should see this come down. And obviously you've got multiple lows to target somewhere down here, that propulsion move as well. But I would, yeah, a bit old, but they get hit. You know, that's been tested, hit again. But, you know, look at the reason these are on here is to show you areas where we've moved strongly from. So, you know, this isn't a let's get in here. If this now has to push and get rejected there because there's a lot of sellers add into their positions there, it's coming down. If that doesn't happen, the strength of movement needed to get through that zone and battle these guys is going to take this massively extended. You're going to get a propulsion move, which will need a profit take. You see what I mean? So this is why I use the RSI and these levels. If that gets invalidated, what's going to happen? It's going to go further. If we get up to that level without stopping, what's going to happen? It's going to be extended and exhausted. What's going to happen after exhaustion? Profit take. Everybody here is a buyer. To get out of those positions, they have to become a seller. If it gets to there, so if you got in here, it didn't work and you tried another one there, by the time you get to there, you're going to get a profit take move. Tick. Just got to wait. That might take 3 days. Don't know. Lots of red on the screen, but confidence is high. I've always got red on my screen. If I don't have red on my screen, I'm not trading. Got to have a bit of red. It's important. Red means you're exposed. The ADR reversals are doing very well at the moment. Done 3.38% in the last week on the ADR reversals. They're sitting 2.9 at the moment. Bit overexposed on the US dollar the wrong way at the minute, but deal with that later. But yeah, red, I'm always in red. Red is exposure. Exposure is potential to make profit. Without exposure, you can't make money. Right, that's all I've got for you this morning. Anything you need, let me know. I will be in the Telegram group. I'm not on this afternoon. There's no point in trading this afternoon. It's going to be dead. So be aware of that, obviously, this morning. it's highly likely we're going to be a little bit rangy this morning on most things. So leading into New York, obviously, we're not going to get a New York session this afternoon. So that sort of price action just caused by London. London's got no one to trade with at the moment but themselves. So this afternoon's going to be a bit of a flat one. So don't obviously try opening range breakouts this afternoon. You can do if you want to, but if you're gonna do an ORB this afternoon on the Nasdaq or the Dow, look at the Globex session. This will give you a good indication. Look at the Globex session there, and look at the Globex session here. Look at the Globex session there. Yeah, and ours here. There's nothing going on. The Globex session is the New York futures market pre-New York Open. There's nothing going on. So the futures market is shut. I think it's, I can't remember what time it is close. It's early close today. So we're going to get no action this afternoon on these indices. You will get movement from the UK and from brokers, but it's just not worth bothering with. So take the afternoon off. Happy President's Day, exactly. Happy President's Day, President. Whoever you are. I know who he is, obviously, but yeah. And obviously, news-wise, as I say, we've got nothing today, so it's dead. Tomorrow is when it all kicks off, and we're going to have a fairly busy DAX session tomorrow, but I think the open is going to be fairly weak. So again, pre-market tomorrow might be a funny one. So be careful tomorrow morning with the DAX as well. I'll be on for that one, though. So. All right, so I'll be in the Telegram group if you need anything. Other than that, I'm just going to be working on EA development and other things today. And yeah, I'll be back tomorrow morning at 7:50, and obviously for the New York session tomorrow afternoon, because we will be having a New York tomorrow afternoon. So anything you need, let me know. Otherwise, have a good day, and hopefully it's profitable. And I will see you guys tomorrow morning.